Hello, my name is Dominique McGee. I'm a senior here at the University of Mississippi, and I'm a journalism major, and I specialize in magazine production and everything. And it is my pleasure to present to you all the president of Magazine and Books Retail Association, Mr. Jerry Lynch.
Lucky it didn't bite you. Morning, everybody. If you're from the East Coast, good afternoon. So I've got a quote up here I found the other day. I think it's kind of important. I'm going to talk about retail, bricks and mortar retail in particular. But the thing that's interesting about retail is that it's a crazy, crazy business. And that's the environment that we in bricks and mortar, or we in the print magazine, or we in newsstand operate in. So what I'm going to try to do today is kind of hydrate ourselves on what's going on in the retail side. And I'm not going to give you a full glass of water. I think I'm just going to give you enough to wet your whistle. So hopefully you'll come back and be interested in pursuing this and finding out more information as we go along. What's the forward? Which one's forward? Oh, here it is. Right there.
Is it on?
I flipped it, but it's not working. All right.
Technical difficulties.
We'll be okay. I'll just stand here and not move around. Thanks to Samir for inviting us. MBR, for those who don't know, it's the Magazines and Books at Retail Trade Association. You might know us as IPDA or PBAA. We merged last year and formed this new organization called MBR. My history is I worked at a company, a regional grocery you might know of. It's called Wegmans. And I worked there for over 30 years. I like to tell people that I started when I was 6. And had a great company, great career. And one of the categories that I had responsibility for was books and magazines, with a bunch of others as well. It was interesting. I saw the picture of the Flatiron building up here that we put up, and right in front of that you saw this clock. You know, that clock, it's 205th Avenue. It stands right in front of it. That used to be the toy building in New York. They called it the toy building. We would go there every year for toy shows. And that was one of my trips that we would go down. Some fond memories, some not so fond. Toys is a tough business as well. They don't sell them anymore at any rate. Samir asked me to kind of set up tomorrow's discussion, which is kind of where are we going in this supply chain? How do we address some of these issues at newsstand? And that's what I'm going to try to do. But to do that, I think what I'm going to do here first is just kind of, let's talk about where we are right now. And I'm going to talk about that in the context of magazines, and then retail in general, and then are there any opportunities that we see that maybe we can talk about tomorrow. For those of you, the students that are here, just my little history here, I started out, I got a BA in psychology and communications. And I thought for sure I was going to work at Wegmans for the rest of my life. Now I'm in buying. I don't know what that has to do with psychology. Tried to figure out my boss a couple of times. It didn't work real well. But it's interesting how your career path never stays the same. I think somebody said it here earlier, just be open. Be open to possibilities, because they will come at you. And be open to trying these new things. And if you can do it early, that's great. But never be afraid to fail. I think there's always going to be opportunities out there. Okay. And the other thing I would say is, you never quite get used to speaking to a group of people. You're always just a little bit nervous until about halfway through, and then all of a sudden it feels okay, and then the presentation goes too long. So I'll try not to do that. Keep a little bit of nervous so I stay short. So where are we on the magazine side of things? So some of you might have seen this. It's challenging. This is a slide that a lot of folks see. Magnet puts out this business, and if you look at the numbers, it's not good. It really isn't good. And there's a whole class of trade breakdown in there that you're looking at, which I won't focus on at the moment. But suffice it to say, overall, it's challenging for sure. And in total, down 6.6% units, which is really kind of a larger problem for some of us, is down 12.1. Space is allocated to the category in retail, and I'm talking about not the Best Buys that we saw here, not the Macy's, not those folks that are shutting down stores, not Sears, because they don't sell magazines. What I'm talking about are the places that actually sell and have a large display devoted to magazines. Space is down. And if sales are down, space is down. Sometimes it's a chicken or the egg. We're not sure which one comes first, but let's suffice it to say that they're both down. And on top of that, the quality of space, which is hard to judge in retail, that's also under fire. As you well know, there's good locations. Walk in the front door, that's a great location. Walk beyond the register, that's a bad location. But those, and you can look at those locations all around the store, and you can see that the quality of space is also under fire. And we're still dealing with this negativity that's associated with print. We've talked about this a little bit here today, this morning. It's out there. And retailers, unless you tell them otherwise and you prove it to them, they've got a precondition. They're going to hold on to these negative, just a negative group. It's really, really hard to penetrate, especially on a category that they don't believe is core. So it holds up, and it holds up over time. And believe me, we've been fighting this for quite a while. So here's a slide on just magazine sales, and you can see that the loss, which is the 2016 versus 2015, pretty much well spread all across the classes of trade that we're tracking here. And to be fair, terminals, Kurt Packard's here, there's an exception in that little line. I think they're probably pretty even, where we had some distribution problems with one of the large terminal retailers that actually was responsible for a large majority of that loss. But otherwise, if you look at this, it's a pretty fair spread of loss of sales across all the chains. And if you look at it by market share, it's slightly different. It's interesting to note, supermarkets actually gained share. So they're selling more of the magazine sales. And super centers, that would be essentially Walmart, and super targets, they gain market share. And you can look at some of the other clients, and bookstores actually gain share as well. So it's interesting in an environment where you have lost sales to be able to talk about market share increases. Because from a retailer standpoint, being a former retailer, I guarantee you, your competition is extremely important. And understanding how you stack up or how you benchmark against competition is certainly something that retailers want to know about. How we leverage that, we'll talk about that in a second. So let's just talk about retail in general. It is under fire everywhere. It's just an incredible universe. And here's some of the headlines I just pulled out. Retail jobs, contributing to Mark's jobs. Kroger, which had a 13-year quarterly growth streak, dropped last quarter. CVS, about a year ago, bought Target's pharmacy business. And that is a dramatic change for a retailer to say, look, here's part of what I thought was a core part of my business. I'm just going to pick that up and give it to you. I don't want it anymore. That is incredible. That just blew me away. Now, in that same in CVS area, CVS did something that Wegmans did many years before, because they're now considering themselves to be a health marketer. They took out all cigarettes and tobacco out of their stores. I think it was rumored to be a $2 billion cost, somewhere in that area. They became really concerned about marketing and how important marketing was, that they were actually willing to walk away from very profitable sales because they see how the business is changing. And on the bottom here, we have Walmart seeing strong holiday sales, but e-commerce is still something that they have to worry about, and that's what they're going to be focused on, and we'll talk about that in a few slides coming up. So just in general, bricks and mortar at retail today, it's challenging. Sales are difficult, and they're moving around across most classes of trades, across many categories. So it's not something that you would say is unique to publishing, let's just say. You could look at any category in the store, and this overarching problem that retail has is there. Trips, meaning how many times does a customer come into my store? Generally, they're down. And if they're up, they're coming in with smaller basket size, which means I'm only buying fewer items than I had before. And from an economic standpoint for retailers who operate at pretty thin margins, especially if you're a supermarket, really thin margins, when that happens, that's a problem. That really is a problem. And they have to react to that. At MBR, at PBAA, at IPDA, we spend a lot of time trying to hydrate ourselves or educate ourselves on what the retail marketplace is doing. We've worked with Retail Net Group, R&G we call them, in 2013 and 14, and in 2015-16 we worked with Kantar Retail. So throughout my presentation you're going to see some of their slides where they come in and try to talk to us about what's going on in retail and try to figure out what some of these opportunities might be. So here's one here from Kantar that talks about what's happening in retail, and they're saying it's fragmented, fractured, and factional. And this is something that's going on in society that's really impacting their business that retailers have to react to. The technology, they have to react to that. The demographic shifts, the income divergence. Where am I? How am I going to position? What do I do with these phenomena in store?
What do you mean by faction? Faction, what do you mean by
Split up, factions. You got different factions. Slide from FMI, Food Marketing Institute. So this is really looking at grocery. So this is talking about trips. If you look at what happened, I mentioned this before, trips were down, back in 2005, they were getting 2.2 trips per week from the customers. It's down to 1.6. They actually ticked up a little bit over the prior year, but down to 1.6 trips. Again, that has a dramatic effect. And if you think about where our traditional look for businesses, when we're an impulse category, as defined, we're after eyeballs. Well, guess what? The eyeballs aren't there. There's not as many. And for an impulse category, that's a problem. And then you can see what's happening to spending, weekly spending on grocery. It's going up, but if trips are down, it's not enough to make up for that loss in trips. Primary stores. Now, primary store is where do I shop the most? What's my favorite? Another FMI slide. If you look at what happened, supermarkets have lost since 2005 from 67% being the primary store down to 49%. And guess what? Where did it go? It went everywhere. They're shopping all over the place. And here's the problem. It kind of leads to where basket size is. This is what's happened. This is another Kantar retail slide. It looks like it's gone to fill-in trips, smaller trips. So I'm not buying as much product as I used to buy when I'm in. So I'm in less and I'm buying less. That's a problem. And if I happen to go a little bit more, I'm not buying as much in the basket to make up for that. So this is a challenge for retailers. They've got to figure out how to solve this because in their economics, they need basket size. It's the best thing you can have in terms of profit is to have a large basket because your overhead goes down in terms of how you handle that customer through the store. A lot of trips can be a problem because you got to get them out and it's really hard to get people out of the store quickly. So they've got this challenge. They've got to figure out they would love to build basket size. They would love to have more trips. They really want both. So if you look at here, here's what we call the loyalty factor. So even though the primary store choices, it almost seems to conflict with the prior slide that I show up, less retailers were actually shopped. Down from 12.4 in 2007 to 9.4 in 2016. So they're not going as many places. They've made choices that says, I don't have a primary store, so that's dropped. But on top of not having a primary store, they're not shopping in as many places. So consumers are really, really changing. And if you think about our business model on the magazine side, if our model doesn't change to take care of some of these realities, that's a tough place to be. And if retailers don't change to address some of these realities, that's a problem. And one thing to note, because this is all retail, visits to stores and websites. So this is a slide from 2015 from Retail Net Group, and they talked about, they have a forecast of where they thought the transactions were actually going to occur in a store. That's kind of an important slide. On the right-hand side, they believe that 25% of retail would be digitally rung up, let's just say, either delivered to your home or picked up in store. Two things to point out here is 75% of the business is still over here. 75%, it's still a big piece of the pie. What's interesting here is that these are influenced by digital. That's the projection. See, anybody familiar with the term, the moment of truth? It's a P&G term. Basically, when is that customer going to make that decision to buy? When does that happen? And now it's been moved to the zero moment of truth because they're making decisions out of the store. The moment of truth would be that moment when you're at the shelf and you go, I'm going to buy that. Well, now that decision in many cases is being moved out of the store, into the home, onto the phone, wherever. Part of the challenge is to be able to get into that moment of truth with the product you're trying to sell. And for retailers, that's a problem. How are they going to do that? So look at what's happened on what people view as the store for that's the best venue for these key aspects of shopping. And what I found really interesting, so bricks and mortar holds up pretty well. They haven't lost too much. But when you come over here, they start to lose some share on quality, having fun. So that means they've lost having fun to online. Spending, feeling like I got a good deal. All of these factors are a problem if you're so concerned about your shopper and their experience. That kind of information is going to get retailers to pay attention. Retailers, in terms of what they're doing now and where we project the sales to actually occur, store size is coming down. So we would have some pretty large stores, somewhere between 100 and 150,000. Above 150 is pretty much all super Walmarts, 150,000 square feet. Wegmans, if you're familiar with them, they have 120, 130,000 square foot stores. But look at what he's projecting for the growth to come from. Most of the growth is going to come out of stores less than 20,000 square feet. If you're familiar with Walmart, neighborhood markets, that's the kind of store we're looking to see that's going to basically really cut down on the available space for retail. Again, that's a problem for categories that are fighting for attention in a store. So this is a survey from Supermarket News, and it talked about where did you see the threats coming to your business. And what I think is interesting here is to look at the change between the survey that ended in January 2015 and the one that ended in 16. Retailers weren't concerned about online retailers, 11% of them. It doubled in a year. Walmart used to be always number one by far. Everybody's always worried about Walmart. And if you have to have a Costco nearby, you'd be worried about that too. It dropped. Dollar stores dropped. So I think that what you're looking at here is an interesting shift in terms of what retailers are looking at. This is a slide that Kantar did at a session we had a couple weeks ago, and it was really focused on Target. We were doing a deep dive on Target. They invested really heavily in food, trying to drive traffic. You know, most of you folks know that food is probably one of the most frequently purchased items, and it drives a lot of business. You think about milk and bread, it drives trips. But look at what they found out when they did the survey in terms of what motivated that trip. Look at food. Didn't work. Still oriented on general merchandise. So just putting a product category in doesn't necessarily change who you are. Here's an interesting Walmart slide. The average number of departments shopped, and then the other number is conversion. So they're actually able, if you look at this slide, they were actually able to stop the decline in terms of departments shopped. They were actually able to get them to shop more departments, but the conversion rate is still not great. So they're successful in getting people to go through the store, but they couldn't quite get them to buy. Step one is to get them to go through the store. Now you've got to close the sale. So looking at all these things, if this is what retailers are looking at, this is the environment they're operating in, what are they going to do? Well, consolidate. If your business is under fire, you've got to figure out a way to lower costs, and we've seen a lot of consolidation across the business. Much, in the publishing, we've seen consolidation, and you're looking at it here too in the retail side. Where are they going to spend their money? Or where do they think they're going to go after these challenges? And they're going to optimize. Look at that, number one, optimizing digital commerce as growth. Walmart bought Jet. If you're the largest retailer in the country, can you really stop and let Amazon take it away from you? You can't. You just can't. You've got to do something. And I think what you're going to see over time is you will see a lot of reaction and really focused on e-commerce. And people won't necessarily say Amazon, but really that's what they're looking at. They're going to have to change their store size. So that prior slide where I showed you where store sizes are coming down, that's because if you're going to have 25% less of the business occurring in the box, you could basically get rid of 25% of your space. You don't need it. If you want to be profitable, every square foot in that store has got to be productive. So you will see big decreases in space. Bob Wegman, back in 1967, made a speech at an FMI conference. But basically, the way I roll this up is he was fighting for differentiation. If you want to be a retailer, you can't be just like everybody else. You better be different. Because if you're not different, why are you here? And what I think you're going to see is retailers really fighting for that differentiation slot. This is a slide from Retail Net Group. They call it the red and the blue ocean. If you're in the red ocean, which is underneath that curved line, that's a bad place to be. That's a Me Too operation. You're trying to be everything to everybody. If you're outside that curve with differentiated product on the high end and low cost on the low end, and someplace out in the middle in the blue ocean or where you're trying to do both, that's where retail's moving toward. And those are the outfits that are having success. So you're going to see more and more moves as people try to get and differentiate themselves further from the competition. Another retail net slide, and if they're looking at this differentiation strategy and trying to reinvent themselves, what are they going to focus on? And all of these factors come to play. And look at convenience and shoppability, all focused, when we're talking about store reinvention, I think what you see on the next slide, and this is a Walmart slide. This is actually a Walmart slide with a customer in the center. And we've talked about that a lot today. It's about the reader. It's about the customer. And the customer is really going to be where the focus is going to. And if you don't have the customer in mind, you're going to lose. So this is a quote from Doug McMillan, the CEO. We've got to win on baskets. Back to that again. And the economics not only in our favor, he's talking about Walmart here, but in the customer's favor if they shop a basket at a time. What they're looking at here is they believe that by lowering prices, they can grow sales, which basically allows them, through sales, to lower their cost and then get more lower prices, and then you just keep going around and around again. They believe that this is key to their strategy for growth. Not surprising, Walmart, low prices, it makes sense. That's how they look to differentiate themselves. But if you go back a year and a half, 2 years ago, they lost focus. They lost this. Now they're back, and they're coming at it, and they're coming at it hard. And I have a few more slides. We'll touch on that. More differentiation. Look at this focus on perishables. It's really hard for the internet companies to be able to compete with this. Really hard. So you're going to see more and more retailers really going after perishables. And perishables not just in produce, but you look at deli, look at the meat departments, look at fish. Very difficult to compete, very, very difficult to get knowledgeable in these businesses. These are tough businesses to run. They're reinventing the front end. And they're trying to figure out how to, through differentiation, figure out how to get customers out of the store faster. You know, automated checkouts. So when you think about people standing in line looking at magazines because they're waiting for the thing to get checked out, guess what? They're going to be gone. And we've heard a lot of conversations about checkouts going away at some point in time. We just won't need them. What are we going to do then? How do we capture that customer if we don't have the front end to actually people look at those covers? So a lot going on the front end to try to speed things up. And click and collect. Big, big emphasis. Everybody is going out after this. If you think about what retailers have in terms of their investment in bricks and mortar boxes, they've got these stores all across the country. That should be, if you're trying to leverage that as a strength, can you get consumers to come to your store and pick it up? Because the cost, one of the largest costs for somebody like Amazon is delivering that sucker to the home. If I can get the customer to come to Walmart when I just pulled up with a truck with a whole bunch of deliveries, or I picked it off the store shelf, I can have a cost advantage. You're going to see a lot of folks figuring out how to leverage this in their businesses. And with exceptions, we're not there. We're not in that. We're not in that business. And Loblaws just announced where they're going after e-commerce and IT infrastructure. Sounds like a digital play to me. They have to go after click and collect. They see that as being part of their future. So what are retailers focusing on? Sales. Always grow the top line. That's always number one. Always. Never changes. Profit. We have a challenge in profit because a lot of our monies are below the line in some of this SBT scan-based trading that we have. We have to figure out how to tell that story so that we can win on the profit measure. They're going to be talking about traffic and trips, basket size. I won't read them all. But what's key here is they're really going after that consumer. And that seems to line up well where I think the publishing industry is going. So let's talk about some of the hurdles. Disengaged retailers, with exceptions. There's some great retailers out there that are very engaged in that category. But we lack passionate category merchants. We lack people that really are excited about the product. Real quickly, I was at a Wegmans presentation once. I had this gentleman came up, and he was giving a presentation to all the bosses. It was a big corporation. This gentleman's come up, and he's going to talk. He's a buyer. He's going to talk about Virginia peanuts. Now, he's got a big group, and he's got a can of Virginia peanuts. Well, let me tell you something. I knew more about Virginia peanuts and how great these peanuts were by the time he finished his presentation that everybody in the room had to have them. In that category, and that buyer, he won by being extremely passionate and knowledgeable about the category. He sold it. And he sold it to the company, and he sold it in, and the category was on fire because he created believers. We, on the other hand, we don't have those passionate merchants, and a lot of it, I believe, is because historically, we just sold. And our selling message was, don't worry about it, Mr. Retailer. You don't have to be involved. We'll take care of it. You don't have to do anything. Nothing. Don't worry about it. It's great. And honestly, retailers, they love it. They love it. You're just going to give me money? Yep. And guess what? We take it all out, and we'll bring in new product every week, and we're going to write you a check every month. It's like, oh my God, this is awesome. But when sales go down, the awesomeness kind of goes away. And that's when you start to need passionate people to be able to drive the category. And you need engaged retailers if you're trying to get over some of these hurdles that we have. How are you going to create those? So, and it's also important that when you look at this category that breaks the traditional CPG rules, consumer product goods, you know, we have a category that goes in and sells at 30, you know, really good 35% sell-through rates. I had responsibility for Christmas category. If my sell-through was below 80, they would kill me. So when we say, wow, we got a 30% sell-through, people go, what the hell are you talking about? How does that work? How are you going to make that work? It doesn't make any sense. You mean all this, it must mean the product doesn't cost anything. How are you doing that? So having somebody involved and engaged that can actually get over some of those hurdles inside to break down those barriers to get folks to actually work with the category is important. So, you know, things have changed and we need strong category merchants. And publishers, quite honestly, are frustrated by retail. I don't get it. Hey, why am I getting all the poor locations? You got this great product. It's so profitable. What are you doing? And you cut the checkouts? Why? What? And you put this up and you covered the product? I got this great item. I made this great cover, and I can't see it. Or you put it on the floor, or you buried me in the back over by the bathroom someplace. I don't understand. You know, and can we actually grow sales? Should I continue to invest? I went into a Tampa Walmart. I went and took this picture of the magazine section. Not a bad looking section, right? Until I figured out where it was. I didn't know. I couldn't find it. This guy did. He was pretty good. So I understand the frustration that publishers can have when you look at the retail side. And I think we in Newsstand, which is where I'm at, we're in the middle of these two groups. We're trying to figure out how do we pull both these groups together and actually look at what we think is the opportunity. Publishers don't get retail. Retail doesn't get publishing. We've got consumers that we are both desperate to service, and Newsstand's trying to figure out how to pull them together. But in bricks and mortar retail, according to Albert Einstein, a great opportunity. And I didn't know it, but I think he looks a little bit like Samir. I don't know who knows. But there is opportunity, and I firmly believe that there is opportunity here. So here's the good news. Still over $2 billion. We're ringing up almost $6 million every day, 1 million copies every day. We're servicing over 121,000 outlets. That's a lot of physical spots that we actually bring product to. It's extremely profitable. I'll touch on that in a second. A supply chain that has wrenched out costs. You know, figure we've lost a lot of volume over the last 10 years, but we're still here, and we still have an operation. That means we've really done some things to drop costs down. And we have retailers, kind of what we talked the first half of this presentation about, really anxious and looking for help. So here's a profit story. On an item basis, our average ring is $5.19. Our margin is $1.52. But if you look at true profit, which is after all costs come out, they're still making 62 cents. And when you compare that to a center store grocery, this is grocery, it's against 28, we look really good. So on every magazine, every additional magazine that you sell in your store, Mr. Retailer, Mr. Grocery Store, you're going to add another 62 cents to your bottom line. That's pretty appealing. And guess what? We've got simply great product. What I fault ourselves for is not talking about that. This is what we have to sell. Profits are great, but what retailers want are these consumers. That's who they're after. And that's who we know. Retailers believe they know them very well, too. And the consumers certainly have changed. We did a survey with a field agent back in 2015 of purchasers in retail. And this is what they came back to about, why? Why did you make these decisions? They're interesting. It's not about, coupons is there, but it's pretty small. But lots of good reasons, and if you put your retailer hat on, these are reasons that they would like to be part of as a retailer. Real quick, you saw this slide yesterday from Susan. This was not coordinated, but I pulled that same slide off the MPA handbook. If you don't have it, you should get it. I know there's some copies outside, but there's some great information on this. But this is about the people that actually read magazines. These people, retailers want. But I guarantee you, retailers don't think that is the case. And again, pulling from MPA slides, if you look at the effect of advertising, this is something that's good news. Ads actually sell more product. That's great. And if Walmart, as one of the key items, wants to be a house of brands, what is magazines? Certainly a house of brands. I think stronger than Lego. I think stronger than Reese's. And obviously the readers believe in brands, so that would be something we could sell to Walmart. And if you think about how magazine readers look at for health, and think about some of the stores that you know and their health orientation, and look at the magazines that we have to talk about cooking and health. And these are the customers that retailers want. Flexible, Target's looking for flexible categories. We certainly can be flexible. We bring in product every week. We take product out every week. Let's maximize that flexibility in this retail marketplace. Greg Ferran at Walmart, he wants to talk about running great stores. He's the president and CEO, by the way. If you think about our 360-degree experience that we're trying to create with magazines, we can provide value in each of these places. This is Steve Bratsby. He's the Chief Merchandising Officer at Walmart. These are his key focus items: assortment, inventory, and experience. Do you think magazines can play in that? Sure, absolutely. It's funny, I looked at this and I said, okay, inspiration. If Walmart's looking for experience and they have inspiration and they're going to focus on services, events, and service, really? This is the inspiration you're going for? Think about what magazines can do there. The signature category focus for Target: style, wellness, baby, kids. That's the 4 areas that they're going to be focusing on. Certainly, magazines and content can certainly play a role in Target. We have the knowledge. We have to figure out how to leverage it inside this retailer. If we do that, real opportunity to win. And they're going to be focused more on regional. Look at all these regional activities that Target has. Really going after regionalization. All the regional magazines we talked about. Obviously an opportunity there as well. And certainly with the shifting business, if you think about all the learning that the magazine publishing companies have gone through to learn how to do digital right, is that knowledge that we can share with our retail partners? I think so. And pick up and collect. We have to be there. Whatever the reasons not to be, we have to get rid of them, but we have to be there. So if we want to seize this opportunity, embrace retail. I mean, really embrace it. Look at it as an opportunity. It is an opportunity for growth, I believe. Raise expectations. Let's not assume that the business is going to go down. Let's say it's going to go up. We have retailers out there that are doing probably over 1% of their business, penetration, over 1% of their business in magazines. But the average is somewhere around 0.25. How is it that we have retailers doing 1% and the average is 0.25? That means if it's 0.25, we have some people doing less than that. That's pretty sad when you think about the pie where we have so many consumers interested in the category. How are they in a store and not buying? It's amazing. Collaborate, really collaborate. It's going to take something to get retailers. It's really going to take some work for us to actually look at retailers like we look at advertisers. Retailers are giving us the option to put product in their store. Why? Why? We have to earn it. We really have to earn it. And if we looked at retailers and we collaborated with them the way that we look at advertisers, I think the success would be incredible. Absolutely incredible. And retailers are stubborn, believe me. I was one. It's really hard. Hey, that's my name on the door out there, not you. It's really, really difficult to get their attention. But when you do, it's amazing. It's amazing. Invest in retail with a focus. It's going to take some, and I think it's really about not necessarily money, but attention. It has to be on the radar. Form real partnerships. Communicate what we sell first. Lead with product. Let's be proud about what it is that we sell. Recognize that we have expertise and consumer insights to share. Retailers really value those. And we can leverage it. Engage the digital, social, and physical synergies. It's not just about selling a physical copy. We have all of this digital strategy. We can do that. When you put that together in a retail environment, that's unique. It doesn't exist anyplace else. It creates a unique opportunity to sell. Think about a food magazine with a cook in a store. It's like, kind of like the plate. What they're doing with they're so focused on those restaurants. That kind of focus in a store where we're bringing all of these assets together and we add the retail experience, it's got to be a win. Play offense. Let's get off the defense. We don't stop defending. Let's go after sales. And let's celebrate. Let's really be excited about what we have. We don't celebrate anywhere near enough. And I would start again with the great product, which I think we spent this morning talking about. We've got great product. Let's celebrate it in the retail stores as well. Thank you.